Hey, this is Greg Britton, your Spokane mortgage strategist. The purpose of this short video is to talk to you about the upcoming changes from FHA. They're going to be effective April 9th, and then some new changes again June 11th of 2012. So first we need to know, who is FHA? In case you don't know, it's the Federal Housing Administration. It's an organization that was geared to help first-time home buyers get into homes for a very low down payment. Their role is to insure the loans for lenders. They're not a lender. They don't set rates. They don't set fees. Their role is to insure low down payment loans for first-time home buyers. Okay. So what are their changes? Well, come April 9th this year, they have one fee that's called an upfront fee that's rolled into the loan amount. It's financed into the loan, and it's going to go from 1% of loan amount to 1.75. Pretty significant increase. That's almost double, of course, but it is financed into the loan, so it's not real painful for the borrower, but it is a pretty significant change. The next change is there's going to be a yearly fee increase, so they charge this yearly fee in addition to the upfront fee. Right now it's 1.15%, and so you divide that by 12 to get the monthly fee. 1.15% of the loan amount is charged to the borrower every month in a fee called mortgage insurance. Now it's going to be 1.25, so not a huge change, but a change. And then come June 11th, those first two changes will apply to high balance loans over $625,000. But then in addition to that, there'll be another 0.25% increase for high balance loans come June 11th. So some pretty significant increases. And then on June 11th, there's some reprieve, actually, some benefit to refinance. So if you were a streamline, which means you currently have an FHA loan, you want to refi to another FHA loan, the annual premium is actually only going to be 0.55%. Remember in the last slide it was 1.15 going to 1.25. It's only going to be 0.55, and the upfront premium, which was 1% going to 1.75, is only going to be 0.01, basically nothing. I think what the goal here is these apply to loans that I think were this streamlined refinance only applies to loans that were closed in 2009. I think it's April or May of 2009 or before. And at that time, the annual premium was only 0.55. So they're saying to these people, hey, we know you have a low annual premium now because you closed your loan a while back. We know there's lower rates. We don't want to ding you, so we're going to charge you that same annual premium, and we're really not going to charge you any new upfront. So that's kind of the idea behind the June 11th streamlined refinance changes. So the other question is, well, why are they? What's the deal with the increases? And the problem is, FHA is completely over leveraged. They're an insurance entity, and they insure loans against default. So if a bunch of loans were to default, FHA right now only has the ability to cover about approximately 4 to 5% of the loans they insure. So that means that 95 to 96% of the loans they insure would not be covered if there was a mass default. They need to deleverage. How do you do that? You increase your prices, and by that, not only do you increase revenue, you decrease your market share. So that's why they're increasing these fees. The good side of it is they need to do it to be healthy and to stay afloat, and it really isn't going to be too much of a pain for the people who are accessing their product. So I hope that helps. Have a great day.